Hello, everyone. Welcome back to the Prospero.ai stock market live streams. Hope you're having a great day. We are in the Halloween spirit today. George and I are showing up in our costumes. I'm sorry, mine's a bit of a sorry excuse for a costume, but I had to pull something together. I'm going as a detective today, so we'll see how long we keep our costumes on. But hope you guys are having a fine day. And we've had a lot of earnings moves going on in the markets, which are mixed overall, but slightly down, I would say, on the day in the QQQ. And the SPY, Dow, and Russell are up. We're going to talk a lot about the stocks that have moved. We've had a lot of big winners so far. Some companies, including Google, Garmin, Snapchat, Reddit, all had very positive reactions. And then we've had some big losers. Some of those have been Eli Lilly, AMD, Chipotle, Wingstop. So we're going to talk about the winners and losers of companies that have reported. We'll go over the Meta, Microsoft, Robinhood, Carvana, and any other earnings that you guys comment and want to hear about that are going to report still coming this week. We have SPY net option sentiment climbing a bit back towards the QQQ, so that's good to see. What does that mean for the market the rest of the year? We'll discuss what this means. Maybe after the election is behind us and most of the earnings, we'll have a melt up through the end of the year. You know, that Santa Claus rally the market is famous for. And then we got some stats out of Google that I want to share of their AI coding, actually, that's just unreal. The amount of coding that's going on within Google now that's just purely AI generated. And once a darling stock of the Prospero signals, which has looked a lot worse recently, SMCI. We need to talk about the story, the breaking news that came out for them today. There's been some questions about their financial engineering that sent the stock lower over the past several months. And it seems like today was the final dagger where their auditors resigned. So we'll discuss all of that, how the Prospero signals, originally spotted this company on the bullish side and how it's looked more bearish recently. And, what once was a darling of AI is now one of the biggest losers. So we'll have to go over that whole SMCI because we talked about it a lot on this channel, especially earlier this year. And then we have two macro stories that we're going to finish off the stream with before we get into the model portfolio update at the very end of the stream today. We have consumer confidence index being up for the month of October, 11%, which is the largest 1 month gain in several years. So what does that mean for different sectors of the market? I want to ask George if it changes his thesis at all on consumer discretionary and retail stocks. If people are more confident, especially heading into the holiday season, will they boost those businesses and be purchasing? Maybe some, a lot of luxury manufacturers have struggled. I think like Ulta Beauty stock and Lululemon have been underperforming Nike. So maybe some of those companies will look better towards the end of the year if these trends continue. And then last but not least, we have the US economy growing but underperforming estimates. So is the growth that it showed enough to make the market happy, or is the fact that it missed a worrying sign? And can the stock market, look past this over coming weeks and months? And if you're someone that has just joined the stream and you missed the very beginning, let me say again that we are wearing Halloween costumes today. So I will be going as a detective on the stream. Happy Halloween, or Halloween Eve, everyone. Okay, but now what I want to do is update everybody on the SPY and the QQQ net option sentiment. I was looking earlier today, and it was looking like we were trending in a bullish direction, but let's check and get a live number for you all. Okay, so let's look at the SPY first. We have the SPY at 34, which is, climbing from single digits earlier this week and the end of last week. So we're seeing overall a positive trend. Still not quite as high as the QQQ, but good to see the SPY gaining. Let's take a look at the QQQ, which has been in the mid and high 50s for the better part of the last month. Okay, so the QQQ is at 54, so it's staying in that bullish level, which I feel like you would expect after a positive Google earnings reaction, although we had some, I guess mixed reactions in tech with AMD also. So we'll see how that weighs on these indexes differently going forward. I can't wait to talk about two things I'm really excited to talk about on the stream today. One, the amount of coding AI is doing for Google, just unreal. And then also the way that AI has impacted Reddit's business and how the stock was able to, gain 37% today because of the boost they've seen from AI. Because one of the ongoing discussions we've had about this AI rally in stock markets is the market's excitement. Is the market getting overly excited for the business gains that companies will see for AI? Meaning, aka, is it a bubble or is it real and it has yet to come to fruition? And I think this Reddit story is now kind of putting us in the second category because they're seeing clear benefits to their business because of AI that allowed their stock to move, make a big 37% move. So yes, that is everything we will be discussing on the stream today. I see we have 40 people in the stream, something I haven't done in a while, but why not? We have some time right now. So let me check in on our YouTube audience, see how many people are viewing on there and how many likes we got. Because I think today, with us dressing up in costumes, I think it's a deservingly 10 like double digit type of day. So let's see how we're doing on the YouTube side of things. And that doesn't let all of our Twitter users off the hook. You guys have to like it too, but let's check on YouTube. Okay, so YouTube only has 3 likes right now. So let's boost that, hit that like button, boost those likes up. 10 likes, double digits on the day. Let's get there for this pre-Halloween dress up stream. Any questions for myself or George? Feel free to comment them. We're just waiting on George to join this up, and perfect timing. Look who's here. Wait, I can't really see his costume, so let's see.
This
Hello, George.
so bright, I can't even see my screen.
I've got these stupid glasses on, so it's tough for me to actually see too. I do like your costume. It's much better than mine.
It's a good lion's head. I don't know if it's all fitting on the screen, but
do you have a full outfit to go along with that when you're really?
I mean, I think this is enough, right? I think this does the job.
I think so too. I was just curious.
It's very hot.
Yeah.
I will tell you that.
Well, I was just telling
But we're doing it.
I was just telling our viewers before you joined the stream that we really deserved to make this our most liked stream for going out of our way and dressing up for our viewers. So, and after you joined, I think there's no doubt left in my mind that it is absolutely necessary. Okay. All right, so let me set you up for where we're going to start today on this Halloween Eve stream of ours. So I wanted to just jump into what we're seeing in the markets today. It's a mixed day overall. We've had some good earnings. We've had some negative earnings reactions yesterday. We're going to discuss some of those companies on the stream today. But we just checked the SPY and the QQQ net option sentiments levels. QQQ remaining bullish, mid-50s. SPY coming back, trending a bit higher now. It was up to 34 after being single digits earlier this week and last week. So as we get these earnings through the pipe and next week's the election, as long as we get no terrible worries, it seems to me that we are trending in a good direction with the SPY net option sentiment rising. Do you think we're setting up for a melt up end of the year as long as we avoid any worst case scenarios here?
Yeah, I mean, I think if everything goes to plan and if the betting markets are right and Trump wins, I think we're definitely heading up into a nice bull market to end the year. But that's the hard part about this election. If Trump doesn't win, it's going to be very hard to say what happens with the country, with the with the um with the markets. So we're setting up for that big, binary kind of case. And I mean, I think where maybe some of this comfort's coming from is more, what we were seeing earlier in the year, whereas people were more sure that he was going to win, they were getting more certainty. But yeah, it's it's a very, very tough election to read, because not only do you have the standard, hey, it's a coin flip and different stocks are going to be helped by different administrations, you also have the added added issue of a lot of questions about the election validity, even heading into it in prior elections. So it makes what is already a tough thing to forecast even more difficult.
And George, I love your commitment of joining the stream in a costume. But I feel like when I edit these videos later this week, I don't know if you want to be in a lion head for every edited video for the next week. So I don't know if you want to take it off or if you want to keep it
We'll
on.
take it off.
Yeah,
I mean, not
it
that
was a
many
good
people
bit.
have joined. If there's maybe we put it on once more at the
Well,
end,
you might have
but you
to
don't have to
edit the
twist my arm on that one.
you might have to edit the model portfolio in the lion head, but we'll see. Um, but yeah, that was a good bit to start off the stream. Um, Okay, so where I want to turn to now is the earnings that we have yet to come. We have another big day on slate. We have Meta and Microsoft today. We have some smaller companies, one that we talk about often, Robinhood, that maybe people will be watching for. Another one that we mentioned a few weeks ago, maybe a month ago, Carvana reports today. Their stock has been ripping like crazy. We highlighted earlier in the week how you were most excited for Meta out of all the big cap tech stocks. Anything changed? Anything interesting? Any of those companies you want to highlight? Any specific notes on for earnings?
Well, I mean, the main reason I was excited about Meta is, we kind of got some validity on yesterday, which is, Google reported, some great ad numbers, right? And then also the other thing is they reported some great cloud numbers too, which, in terms of reading Microsoft, and Meta, some people are saying, oh, that bodes well, but other people are saying that, well, Microsoft might not grow as well as Google Cloud, and that might be an issue for it. And that could be similarly said for Meta. If Meta is showing any weakness in their ad market, that's not going to reflect well with Google reporting strong numbers. So there's the double-edged sword. We saw Meta pop a little bit this morning. Based on that, we're actually going to hold Meta through earnings just because we did see those strong ad numbers, and they're doing a lot of, like we always say, a lot of interesting things in open source AI. We're optimistic that they might be able to report good forecasts in terms of their, AI division, as well as, what they report around this election for ads. I think we could expect positive guidance, but, you never know how it goes. You could be, Meta has done very well. And even like a slight chink in the armor can really affect when you've done as well as they have and had the run that they've had.
And I'm wondering for Microsoft, they seem to be, when this whole AI wave kicked off, the crowned winner by the market, and their stock kind of rose probably the fastest. But recently, it's kind of been just trading sideways. I guess maybe that the price increase that they saw early kind of is now weighing on their stock, and it's like the market's waiting for them to prove it. Do you think that is kind of what's happening? And this earnings, they need to show some kind of upgrade from their AI that they've had in their business?
Yeah, it's a distinction that we make a lot, right? Which is that there's a difference between chips powering AI analysis or training or models or whatever, and actual AI tech. And when you talk about actual AI tech, what we talk about all the time is the real cost of the compute for OpenAI, for Microsoft. We don't even know, right? We don't even know the kind of losses they're running to run it. We know they're running losses. It's not profitable, right? So monetization becomes a much more important thing. And even if you're talking long term, it does become hard to model because, we haven't necessarily seen a winner. OpenAI was kind of the first to arrive, but we don't know if they're going to be the winner yet. They're a good bet to be the winner. But as we can see later from the Google story, I think they're still in the race. I think there's others like Perplexity for Google and for Microsoft. I think they're making an interesting run. Or whenever you get new technologies, no, I'm hearing more and more about other kind of interfaces being the big thing, and people not even using, say, PCs anymore, which would be a problem for Microsoft, right? And they might be just talking to Siri, like Apple is making a big run at that, and it might be just a lot easier for people to just talk to a voice instead of even dealing with a personal computer for a lot of work. And even all these people that are using ChatGPT, right? You could just be interacting with a prompt instead of typing a prompt. So I think there's a lot of unanswered questions. And if you're talking about like what is here right now, definitely chips, compute sales, that's here right now. But the actual AI monetization, not quite there yet, even for the biggest name in OpenAI. And I think that's something that people are going to be watching very closely.
We have a question or a comment from Ted Chairman. George, your camera, it's a bit dark. I don't know if it's an easy fix or just a little adjustment that you could try and do. You're a bit dark on the
Oh, I
screen
think,
though.
yeah, I can.
But let me just read this question while we sort the camera. Oh yeah, that looks better,
I've overdone
brighter.
it.
Um,
Is this better?
yes, much better. We question from Ted: are we holding Peloton through earnings? I don't know if you hold them at all or if you're following them or interested, but what do you think of Peloton?
Yeah, I mean, in the training letter, the trading letter, I did just realize I think I have two positions. I'll probably close one of them, but in the trading letter, we generally hold through earnings as long as the numbers add up. So we'll take a look at the end in the model portfolio, but as long as the numbers hold up, we'll hold at least one.
Okay. One of the companies that reported and had a positive reaction was Garmin. They were up 23% today on strong growth and wearable demand. And I thought this specific company was interesting because of the things you've been highlighting and how wearables for a lot of the big tech companies are the next leg of growth. We were talking about Apple and Amazon when we were talking about it, but maybe Garmin is actually a sneaky play in that theory, and maybe they just need to partner with one of these AI players and tech players, and then they would have the most benefit from that theme that you were kind of thinking about. So, how do you feel about that? Is Garmin interesting?
Sometimes you have to complement like a good pivot, right? And Garmin originally was those like navigation systems, right? And they've done some smart things to survive. So yeah, I think given that, I think wearables are, very interesting. I'm not sure I would bet on Garmin longer term, but they could certainly have enough market share. I think, what a lot of people are looking at is that they're undervalued relative to what they are, which is, kind of what happens when companies pivot sometimes. They're not, respected as, look the new company. I think we've seen that with like Nokia, and even Motorola as a bigger company comes to mind. So yeah, I think Garmin is worth keeping an eye on. I mean, they certainly impressed this week and wouldn't necessarily put it at the top of my list, but it's definitely something. If the signals are showing good in Prospero, I definitely think it could be a momentum trade or could be a long-term value trade, depending on where you see their product line fitting in.
Seems like it could be a possible buyout candidate, no, or acquisition of one of these tech companies if the regulation within the business world gets a little cranked down with the next, uh, you know,
Definitely.
yeah.
Definitely a tech company that wants to kind of expand their wearables division. I think like Google or Microsoft comes to mind, right? Apple is obviously, filled up, maybe even Meta, are all companies that might want to increase their data gathering and kind of see a company that's already, growing their hardware. I think that's right. I think it could be an interesting acquisition for sure.
We'll have to keep our eyes on it. And the next couple notes we have, I think, are cool because they are kind of the first steps and legs we're seeing of AI actually impacting businesses beyond where people are just excited in the technology, I feel like. So Reddit was up a ton today, 37%. they had their first ever profitable quarter. They increased monthly users by 50%, and they attributed that to the ability to translate with AI basically instantly. It allowed people to access a lot of their different data throughout their app, and also them selling their data to Google and OpenAI for training also boosted their revenue and earnings. So that's a clear case of AI impacting their business. And then we also got a note from Google where they're saying that 20% of, 25% of all the code within their company is now generated by AI. So does this excite you? Because we're kind of seeing the AI effect now.
Yeah, I mean, I actually had an article go a little crazy this week in terms of viewership. I called it like basically silent firing as opposed to like quiet quitting when people weren't really quitting their jobs. They were just like coasting through work. Like silent firing is like what I actually am expecting, tech companies to do more, which like, I called out Amazon because 73% of their employees basically said they'd consider quitting over their 5-day in office policy. And I'm just like, there's a lot of proof that remote work is more productive. Their employees don't want it. So, the conclusion there is like, I think Amazon might want some people to quit so they could save on severance. And yeah, when you see a number like that at Google, it's coming, and it's coming because public companies have to get ROI on spend. And these companies are spending on AI. So they have to show benefits of that spending. And the obvious place is reducing headcount, and automating code work, especially, engineering work, because engineering work could be, very expensive. And I think we're going to see that trend happening more and more. In terms of Reddit, I think not only, I mean, I don't think they got enough for selling their training data, but maybe if they're selling it to enough people, it doesn't really matter. It's losing value, and we don't know that. But I think Reddit is one. I think we're going to see, as these open AI models or just AI models get more ubiquitous, I think we're going to see a lot more bots on the internet. And, Elon Musk is, I think, anticipating it by, I think, smartly putting like a rate limit in X. He's kind of been ahead of the curve on that. But I also think Reddit is well positioned to handle an influx of bots, because at the end of the day, the best thing to assess bots are other humans. And I think the upvoting system works very well in terms of having, humans elevate the content, which is, very different than, I think even like likes, which can be manipulated. It could be, boosted with a lot of bots. I think, the upvoting system, the fact that you can also downvote something where you can't really do on other platforms, the fact that you can downvote it, I think is a really powerful force in making sure that, the quality of content is maintained and bots aren't basically being boosted. So I think Reddit has a very interesting, they're very well positioned, I think.
And so we just went through some of the biggest gainers on the day from the earnings season, and now we're going to go to the opposite end of the spectrum. We'll go to the biggest losers. I think starting with AMD, being that we're in this AI world right now, will be the right place to go. They were down 10% today. Their earnings for this quarter weren't bad, but their guidance didn't meet investor expectations. I think it's kind of funny because we had a short video that was kind of it was you talking about how Nvidia is Coke, but there is no Pepsi, and we got some comments in our short saying, "What about AMD? What about AMD?" And it just seems like they keep separating further and further from each other in the way that investors react to the stock. So it seems like
Yeah,
you're
I
right.
think beyond the typical answer, I think the main issue with AMD is that for a long time they were actually trying to emphasize CPU programming, and they weren't investing in GPUs as much, which is obviously Nvidia's bread and butter. And I think that was a big thing that widened the gap. And I mean, if you're talking about who data centers, cloud providers they want the most, it's Nvidia chips, bar none. Like, there's a reason they have so much of the high performance marketplace. It's because they get you more dollar for dollar. And AMD, especially if your computing isn't as specialized, right? There's a market for that, but that's a lot of the kind of thing that they're capturing. They're not necessarily winning a lot head to head in the high performance computing environments versus Nvidia, and there's a reason that it has, that kind of market share. So I don't think it's the Pepsi. I think it's like I think it's kind of the afterthought.
A fizzy, you could say, or any other soda brand that gets no popularity. Okay, so next stock, Eli Lilly, down 8% today. I think the market's concerned that the best growth is behind it in the GLP-1 drugs. Is this stock a victim of having a super high bar heading into earnings, or is there anything else wrong with this stock? I know it's been a leader in this Prospero signals like for a lot of this year.
Yeah, I mean, that's why you have to be very, signal focused. And I know we're going to talk about it with another one of our stories, but you've got to be flexible and signal focused. It's like such an important thing. And Eli Lilly is a tough one. It really is. Um, just because it was trading, I believe I saw it at one point up to like a 70 forward PE ratio. So it's kind of a victim of its own, positive R&D growth, good management. And that's what's very tough from a momentum standpoint. We saw that, we noticed it, and we never said it was a good value, but it's the kind of thing that, perception, same thing with a stock like Nvidia is very important. And that's why we look, for those things. I kind of want to take a current look at it, see where it's at. But yeah, if you look at it, it's upside. Look at its upside graph. It's been in the 60s, right? That's not where it's been. It typically was in the 80s. So you could see Prospero signals, saw this coming in terms of the long-term options bets, just not really being there for Eli Lilly. It hasn't passed muster for us. And I can't even tell you why, other than it just wasn't really like coming up on our filters. But looking at that, like, yeah, it looks like upside breakout saw this coming. Like typically we see it in the 80s.
Yeah, so I am going to be interested in seeing what happens to Eli Lilly stock next. But moving on, we had some negative earnings in the food industry. So Chipotle down 7%. They lost their CEO Brian Niccol to Starbucks recently. The thing that I think really hurt the stock was same store sales declined, and then we had Wingstop getting crushed down 19% after profits missed. But that's a stock that also was like kind of like in the Eli Lilly camp where it's been up a lot this year and it's trading at a very high valuation. Um, Anything
What was
stand
the
out to
second
you?
one? Sorry.
Wingstop.
Oh yeah.
So, any of those, either of those, interesting to you? Would you buy the dip in either, or staying away?
Well, I mean, the funny thing about Chipotle is I wonder if their ex CEO knew these bad numbers were coming and was like, "Hey, it's on the way. I might as well like cash in well I can." You kind of always have to think about that. But uh I think that watch Chipotle, it could get to be a good. It got very overvalued. Same with Wingstop. I think they kind of went on their runs. I think retail stocks that were posting good numbers were, attacking that were known brands were attracting a lot of attention just because I think people were moving out of retail brands they were more concerned about, which kind of concentrated the number. But yeah, I absolutely think that they could be good values if they keep on the downswing, but I wouldn't consider either a good value right now. But hey, watch the Prospero signals.
Mhm. Yes, and that leads us into the next company, which is probably the stock of the year in terms of just overall movement and headlines and stories. So SMCI, the once darling, now dumpster fire. It had that crazy move, and it looked so bullish in the Prospero signals earlier this year. But obviously, for people that usually watch the stream, know what's been going on. Their financials have been brought into question today. Another development in that story where their auditors, Ernst and Young, resigned and said they didn't want to be associated with the company anymore, which caused the stock to drop 30%. You kind of hinted at how you can't get attached to a stock. You need to be independent and watch the signals more so. But SMCI is a prime example of that. So if you just want to break down, everything you're thinking about this stock.
Yeah, I mean, honestly, this is why the Prospero signals were invented. I've seen some people come on like TikTok and YouTube and things like that where we have our shorts and like try to like be like, gotcha, like you liked SMCI. And it's just kind of funny because it's like, well, we did. And like, I don't know about you, but I don't really know how to predict maybe accounting fraud or accounting issues, right? But that's why the signals are there, right? Like we were out of SMCI in the investing portfolio like long before this started because we saw net option sentiment go down. If you look now, upside breakout is in the 40s, downside is higher than upside. So we were not in on this at all because institutions were out, right? And while we can't predict accounting fraud, like, institutions have a much better grasp on how to odds make this stuff. So yeah, it's super important. And that's why we invented the signals, right? It's not quite the burn that people think we're getting on us. We're just like, hey, we've been out of that for a long time. We did like it. Data changed and we don't really like it anymore. Haven't liked it. But talk about such an interesting run. It's been around for 30 years, really, and then came out of the woodworks and was like, making these huge gains and now just as quickly back in the gutter. It goes to show you, like, this is why you watch the signals because, things change quickly and no one can predict everything, which is why we have to rely on, where institutions are making their bets. And you'll see, like, while a lot of people can potentially miss this, they can hold on to things for too long, et cetera, et cetera. Our signals were out in front as they almost always are.
And I think the thing that really could help our viewers and investors is like just some people, they get so attached to a company, an investment, it's like it almost becomes a part of them. But it's like you just can't invest like that. You have to stay detached from that and never get so, I don't know, emotionally ingrained in a stock or a company. Can you speak to that at all? And I don't know how you avoid that, or did you have to learn that
Yeah,
along the way?
I think that's a great point, and I've got a few things to say about it. The first one is like a funny one where I get called, like, on the internet. I've been called not a few times a hater if I don't like a stock, and I'm just like, I don't feel things about stocks. I don't love them, hate them. Like, I love the numbers on them, or I hate the numbers on them sometimes. But I'm not in a camp or a stock cult or anything like that where it's just like where you're a true believer or you're not. Like, that's again why we invented the signals, because we're signal based. And sometimes people get confused because they're just like, well, why are you moving so much in your investing letter? And we say that, and it's just because we like Broadcom last week, and this week we like Nvidia better. The signals are better. So sometimes that results in nuance, but sometimes it's very, very clear. And the other thing that's important is, irrespective of that, like, it's important to have an investment thesis, right? And the truth is, we didn't know that much about SMCI before it came on our radar. That's very different than a stock like Meta, where we have a very clear, like, value thesis, had for a while, and thought that the market was behind on the true value of that company, right? A lot of what we were basing our SMCI thesis on was that we were seeing just a really strong run in net option sentiment, upside breakout beyond what you would expect for a company of its, essentially market cap, but getting more attention than it should, and what we see at its market cap, right? So that was something that we were absolutely, looking on, absolutely impressed. But if you have a signal-based thesis that you see the signals change, it's very easy to get out of it. But if you have any thesis, right, I think even if you throw out the signals, right, and we were a little ahead of this, but the second a company starts to say that it has issues with their accounting, and we saw that, and I think there was a delay in one of their filings, unless you think you have some unique angle on why they're going to get out of it, which I doubt you do. I mean, I understand accounting pretty well. I've I've studied accounting for a while. And even then, do I rarely feel I have some unique angle on analyzing the accounting. That's, to people that have much more experience than me. You should run for the hills. And that's a good example of how a numbers-based thesis could have fallen apart on it, and also a qualitative thesis could have fallen apart on it.
All great points, and I'm happy we can cover that and inform our viewers. Now we have bits of macro information before we do our switchover. So firstly, we have the Consumer Confidence Index for October rising 11%, which is the largest one-month jump since March 2021. My question from this is, does it change your opinion or affect how you'll look at consumer discretionary stocks? I feel like a lot have struggled recently, thinking of Nike, Lululemon, Ulta Beauty, a lot of stocks like that kind of not perform that great. Does this get you interested in those at all or change your investment thesis on them?
Yeah, I mean, I don't know where these consumers are getting all this confidence with the debt levels that they have. But that can always be a function of like, the credit markets loosening or optimism around, basically inflation coming down, which is a fair thing to be optimistic about. I think what was making a lot of people negative about the economy was that prices were just going up, and they're just, not going up at the same rate. But yeah, I mean, I think all that being said, I think there is probably more confidence than I would think. And I have some, I have some macro concerns, like GDP missing is something that, it's nice to have that level of growth and it's a good raw number, but it's slower than anticipated, which on the other side could increase optimism that rate cuts are going to come. So you always have that double-edged sword there. But yeah, I think overall there's reasons to be optimistic about the economy, but as we've said, within limits, and there's also reasons to be bearish too. But I think especially that level of consumer confidence and that big change when there hasn't really been any big economic change, I think that's kind of telling you that maybe consumers are more confident than they should be, or at least the delta is bigger than it should be.
And to highlight the GDP numbers, which you mentioned, so for Q3, U.S. economy grew at 2.8%. It was expected to be 3.1%. So it was a miss, but still growing. Is it kind of along the similar lines of you're thinking of what you were just saying about the last topic, where it's like it's fine for now, but is it going to be fine forever, where we're missing on growth now?
Yeah, I mean, I think the GDP numbers, 2.8 is still a great number. It's still a great raw number, even if it misses. So it's not like you're going to have a super negative response to that. But it's still not great that it misses. And yeah, I think that feeds into the point that I'm saying is that I just don't, I don't think the economy is as strong as some think. And I think a lot of the time, a good performing stock market can kind of fool people into doing that, and that'll give you confidence, right? If stocks are providing you money, that's going to give you confidence as a consumer, and it has been a good year in the stock market. But I think that there's some people that are too bearish and some people that are a little too bullish. I think that we have every reason to expect a bull market, but there are some very big things lurking that could not only get in the way of that but create a bear market. And I think you have to respect both sides, especially until the election is fully sorted.
So I like to propose theories every now and again, and here's one for next year. Let's see what you think about it. So I believe the federal deficit was 1.8 trillion this past year. Elon Musk was doing one of the rallies with Trump recently, and he said he thinks he could cut 2 trillion out of the federal budget. He's been said he wants to do that Doge Department of Government Efficiency. If Trump's elected and Elon gets that opportunity, doesn't the federal spending impact GDP a lot? And if they were to cut out 2 trillion, would that like de facto put us in a recession?
It absolutely could put us in a recession. And to me, like, I'm really disappointed with some of the things Elon Musk's been saying. Like, I don't really think you could just, like, it's not even the proper way to cut a budget, cutting 2 trillion in the first shot, right? It is much better and smarter to maybe start with a couple 100 billion, right? Like in intelligent ways, see how that affects the economy, et cetera, et cetera. Like to your point, if you're cutting 2 trillion all at once, it could have a horrible, impact on the government, especially if you're doing something like what they're also talking about, which is huge tariffs that could also have, a big short-term negative impact on GDP, on just like cash in the economy. So if you're talking about both of those things together, that gets to being likely to cause a recession. High new tariffs and huge cut in government spending. So you got to be smarter than taking an axe to a budget. And that's just as true to a company as it is to a country. So I like it seems like, again, something that's more rhetoric than logic.
Mm-hmm. No, yeah, that makes a lot of sense. It is a little confusing because I think Trump cares about the market because he puts his persona in it. So if the market were to like really react to that, I don't know, it'd be crazy to watch how things play out. He might fire Elon Musk from the government. That would be funny. We've hit our time though, and it's about time to do the switchover. So you want to head to the Prospero Lab?
I'll
All
see
right.
you on the other side.
See you on the other side, and chat, stick with me. I'm going to update you guys on the QQQ and SPY net option sentiment as George does the switch over. Taking a live look at the markets, looks like as we've been streaming, they've been trending lower, a bit possibly concerning. Let's hope they stay up towards the end of the day. I was thinking about earlier today, there was times, a year, 2, 3 years ago where you'd get a strong report like you got from Google, a Mag 7 company, and the QQQ would rip the next day, like almost no matter what. And it feels like the balance of power has kind of shifted now. We got the negative AMD report, and it seems like semis are kind of as weighted in the index as these Mag 7 companies now. So I think that was just something that caught my attention. And to see the QQQ down 0.5% after Google had such a strong earnings, I think it is noteworthy. But let's take a look at the QQQ net option sentiment. It was at 54 at the start of the stream. It is currently at 54, so no change there. SPY is at 32, and I believe it was at either 34 or 36 to start the stream. So SPY a smidge lower, but still higher from where it was. Good to see Meta back at 100 upside from Jonathan. Yes, I believe George said he is planning to hold Meta through earnings, and we'll see if that holds true today. I think it will after the Google Ads numbers and how he's reading into Meta from that. I believe he will hold it through, but we will see in a moment. I think Meta hit over $600 for the first time ever earlier today. Let's see if it's still at those levels. Meta right now is at 594. Kind of gave back almost all of the gains that it had, so it's only slightly positive on the day now. Let's see. 595 was earlier high. Jonathan noted, good to see Meta with 100 upside. Oops. I think earlier this week you said you were planning to hold it through earnings. Still the case?
Yeah, I mean, yeah, especially with Google's good ones. I mean, it does add some risk, some additional risk if they don't do as well, but I think we're going to.
Mm-hmm.
I think that's where we sit currently. All right, let me share. Okay. Where are we at? I think
We are at 32 for the SPY and 54 for the QQQ.
no, they're converging even more. And cloud and
Well, Google started us off well and posted great numbers in cloud and ads. So that is a clear reason for market optimism. QQQ net option sentiment is at 54 and SPY is at 32. These numbers have converged as expected, but are not as bullish as they were looking. ... in the morning. Materials rebounded here as one of the industries that has been looking bad on the 1 week. Tech went the other way, but communications looks like the star. It could be entering a period of price gain. We will look to capitalize on this trend if we see further continuation evidence. After growth was looking good last week, it looks like we are tilting towards value this week. We do like the overall trending in small cap and large cap growth. So we'll look for more opportunities in these areas with good momentum.
Still waiting on this. Okay. All right. Well, looks good. Oh, look, there's Garmin. I don't think we want to go too crazy. Ooh, SMCI on the short side. I don't think I'm ready to do that. But oh, how the mighty have fallen.
I wonder how it would play out because it's like they are a real company and they have real products, real revenue. So somewhere there has to be a floor, right?
Yeah. I mean, it's very hard because, like, what will happen generally is, like, when they come out on the other side of it, it'll do well. But, you know, in terms of guessing when that is, again, like, we're not nearly as well equipped as some other institutions at doing that. So I think we're going to do this. And then I want to look at I don't need to do that. I just need to look at I'm going to go.
All right, everybody. Thanks for tuning in. We'll see you guys Monday. Time to see if Zuck 2.0 can deliver. See you guys later.